अच्छा सर, एक ये शुरू कर लेते हैं।
Thank you.
Okay, master data profit center. Now, since we are actually getting very close to starting the journal entries on the front end, and we have already defined standard hierarchy, but let's see, the standard hierarchy is of LAP 9. So what I'll do, I'll go /O/OKKS. /O means new window, new session, not the same window. And and this is BT 63. Okay, BT 63 is BT 63 is set standard hierarchy. BT 63, and we have N01. We have already made profit center N01. And next step is assignment of default profit centers. Company code is BT63. Okay, we have not made this. So what we'll do, AA42, because this is our previously made company code. Control Y, Control C, assign default profit centers to accounts. Okay, BT63. New entries. Enter. Okay, 101 does not exist. So what we'll do, we'll go for accounting, financial accounting, general ledger. Now this is front end. Okay, this is front end activity. And master records, GL accounts, individual processing, FS00. Okay, BT63 has no accounts yet. So what we'll do, we'll go for change company code, AA42. And from here, we'll start. Double click. And over here, if you see, we've already made company code. We'll be making GL account. GL account types can be different. It can relate to balance sheet, or it can be primary cost for manufacturing of material, or it can be for secondary cost, which is totally uh, uh, totally explicitly for manufacturing area secondary cost, where costs from FI side, finance side are captured and transferred to production, to the material, to production order. And that is basically is supervised by GL account of secondary cost. Okay. Primary costs are those that are capturing the cost expenses from the finance side, from journal entries, and transferring to the costing side. Okay. So rest we have details. Then we have some controls that we have to take care of, and that is related to currency, category of tax, reconciliation account, reconciliation in SAP. Reconciliation accounts in SAP are found and made for assets, customers, vendors, and contract account. Contract accounts are for utility companies like gas, companies, electricity companies, telecom companies that actually run contract accounts. The contract accounts are basically having quite a lot of customers. So those customers are channelized through contract accounts receivable. Okay, so four types of reconciliation accounts can be. Alternative accounts are made for group chart of accounts, okay, country chart of accounts, and that will be used for consolidation. Inflation key, if this is a um, foreign currency management account, okay, or foreign currency valuation account, okay, that will be adjusted as per the inflation, and inflation key is defined, configured separately. Tolerance group. Now, tolerance group is basically when you're entering amounts in GL accounts or passing journal entries, you assign users to pass on a certain amount, maximum and lowest limit. You give that through tolerance groups to users. So tolerance groups is assigned to GL, and once tolerance and the other tolerance group is assigned to the employees. Okay. So this is what actually controls it. Open item management, will discuss this later. Sort keys, will discuss this later. Create bank interest. Now, this is where we talk about field status group. We've already assigned field status, and we'll see this very much in detail. Post automatically only, this is an alternative to the reconciliation accounts. Okay. Supplementary automatic postings, supplement, which is basically again related with your consolidation. Automatic postings can be supplemented. Reconciliation account ready for input in some cases where you have to make adjustments. Reconciliation accounts in first place do not take manual entries because reconciliation accounts are supervisory control accounts. But in some cases, you can keep those accounts ready for input for adjustments. Okay, planning level, this is again for planning your cash flow statement, which is can be direct or indirect. Okay, and if this account is relevant to cash or bank, it will be checked as relevant to cash flow. House bank and ID, it works with bank accounts. House bank is basically your branch where you have your account, and that account can be saving, current, running finance. That account ID is the account where the transactions are being, the account, basically bank accounts are being run. Okay. So that being said, now let's actually create, or rather we'll copy 80250, and but no, the first account is 10001 101 10101. Petty cash, copy GL account to BT63. Field status variant is not assigned. Okay. So what we'll do, we'll go to SPRO. Global settings, ledgers, fields, field status variants. So what we'll do, assign company code to field status variants. You can make your own field status variants and assign it as well. But just to save time, we'll pick any right now and we'll assign it. Okay. And that will be LP9. LP9 is L9FS. Copy BT63. BT63. Okay, now this is done. So double click BT63. I hope this doesn't. Okay, now it says there is no problem. I'll just save it. And okay, enter 20,000. It's not there. So what we'll do, 20,000 equity retained earnings account. Double click BT63, enter, and this will become editable. Okay, this is retained earnings account. Save. Enter 30201, and this 30201 will be expense accounts. Three zero two zero one and BT63, enter. Come on. Okay, save, enter 60,000, and 60,000 is enter BT63. Okay, 6,200. 6,200. Okay, BT63. Save. $80 to $50. $80 to $50. BT 263, BT 63, save. Okay, 8300 and 8330. 8300 and input sales tax. BT 63, save. Okay, save. Now we are done. Now we can think about passing journal entries because this was the final step. Not final, but this was the baseline configuration that we have done. Accounting, financial accounting, general ledger, document entry, FB50 enter GL account. Okay. So copy 200 expense to cash 30201 debit 200 10101 credit star, and we have T59X company code BT63 BT63. Continue. Okay. Come on. Come on. Server is not up to the speed. Okay. Come on. So finally, we are here with the double entry. We've already made everything in place. Okay. We've already defined currency. We have already defined GL accounts. We've already defined profit centers. Cost centers are not defined. Okay. Okay. We have already defined company code. No, nothing is responding right now. So if this comes back, this is good. So I'll actually cover what we have done so far. Okay. We have covered company, company code, controlling area, fiscal variant, posting period variant, field status variant. Okay. And right now we are here at general entries. We'll also cover auto entries. So starting with company, this is first step. And then we actually go for ledger and material ledger settings to build and configure currency valuation profile. This is for material valuation, and material valuation, as I said, can go through legal valuation to group valuation. No, legal valuation is 0. And 1 is group valuation. And 2 is profit center valuation. So 3 types of valuation. Legal valuation will have its own currency, which can be USD. Okay. And group valuation can have its own currency, which can be AED, any. And this can be any currency. Okay. So we actually have currency valuation profile. So your reporting is dynamic based on currencies. Then comes in company code. Company code is basically the organizational unit which runs its own operations and makes its own financial statements. Okay. And for this, we need chart of accounts. Chart of accounts is nothing but collection or group of GLs. That's what we have made. And above company code reports to controlling area, and controlling area basically is where you create profit centers, cost centers, product costing, and profitability analysis is done here. What is profitability analysis? This is 3D cube of reporting, which includes location, time, material, segment, which is superlative or controlling element of profit centers, and cost, revenues. So that's why this is a reporting cube. Reporting cube of reporting is profitability analysis. This is made in controlling area. So basically, when you are speaking of profitability analysis, the modules that send data for all this, okay, comes from FI, MM, SD, PP, CEO itself, and what else? Yeah, okay. And fiscal variant, we've already covered this. This is your fiscal year for your company, which can be January to December or July to June or April to March. Posting period variant is you keep your posting period 0 from 1 to 12, either open or closed. That's up to you. Field status variant, we'll discuss this, and we've already made this. Okay. And now we are at the entries. We'll see the financial statement version, general entries. We are already looking into that, but we are stuck over here right now. Okay, so we'll actually continue from here, okay, in the next class.